Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about IPOC, starting with due diligence and then technical analysis. If you would like to give me any suggestions or feedback, please make sure you mention them down in the comments below. Leave your notifications on, subscribe, and drop a like to this video to help the channel grow. Any point of the video, if you have any questions, mention them down in the comments below or through our Discord server that is totally free in a way to engage with me, as I'm very active on it and I always get notifications on it. Let's jump right into it. So, Clover Health. I covered in my previous video a bit into Clover Health. This time we're going to go into a deeper dive into Clover Health and then some of the SEC filings, a bit of the trends that happened after the merger. We have the merger date, some interesting financials that we would cover from 2018 and 2019 and even 2020, kind of give a perspective on their growth. So Clover Health, if you can think about it, it's a Medicare plan with more. It really tailors out for more of the senior level of age groups, and they work in all these current states in Arizona, Georgia, Mississippi, New Jersey, Pennsylvania, South Carolina, Tennessee, and Texas. It's not in every single county. It is in select counties, and they are expanding quickly. Now, quickly moving on towards who they are, Clover is a next-generation Medicare Advantage insurance company offering the best-in-class plans that combines wide access to healthcare and rich supplement benefits with low out-of-pocket expenses. A unique model in health insurance, Clover Health with primary care physicians using its software platform, the Clover Assistant, to deliver data-driven, personalized insights at the point of care. The transaction is expected to fuel Clover's trajectory as one of the nation's fastest-growing Medicare Advantage plans. Transaction value, Clover at the enterprise of $3.7 billion and is expected to provide up to $1.2 billion in cash proceeds, including a fully committed pipe of $400 million and up to $828 million of cash held in trust accounts of Social Capital SCH Holdings, which is the current one holding the SPAC. Pipe led by $100 million from Shamath, that is the founder and CEO of SCH, and $50 million from Hedosophia, as well as the commitment from Fidelity Management Research Company LLC and funded affiliate with Jennison Center Investment Group LP. Now, Clover is expected to receive up to $728 million of transaction proceeds and up to $500 million of cash proceeds is expected to be allocated for existing Clover shareholders. Now, just in case you heard this before, I'm just trying to cover it for people who are watching this video for the very first time, or at least IPOC for the first time. Now, in a way, this is a SPAC, which means that this company actually exists, and so does the one that the current ticker is. But they're two different entities, and they reverse merger into a special acquisition corporation. So quickly diving into Clover Health, into a deeper dive before going on towards their SEC filings and some of their financials, some interesting things there. So before we go there, quickly taking a quick look into their numbers, anything that we haven't covered yet. We covered this one here. It's the largest undisrupted market in healthcare, around 1.25 trillion in TAM and overall Medicare, with a 14% CAGR from 2019 to 2025. So there is growth there. Their growth cycle is to capture and synthesize data, apply to machine learning to provide data-driven personalized insight to the point of care via the Clover Assistant, improve clinical decision-making to drive better care, 4. Share superior economics with members via lower cost and better benefits, and 5. Drive strong market-leading organic membership growth. Now, step 1. Our technical moat is centered around our ability to connect data with actions at the point of care. And so really what they're trying to do is use the data to continuously update what their clients needs, what their customer needs, to provide them a better solution while keeping up engagement to be a very high level before they even need it, at a very low cost or no additional cost to their current plans. Step 2. How the Clover Assistant surfaces evidence-based protocols at the point of care. So first, it provides clinical recommendations to help doctors develop evidence-based treatment plans. Shares with physicians the specific reasons why a recommendation is being made. Identifies the clinical guidelines on treatment protocols applicable to a member's specific condition and disease burden. Identifies potential costs or blockers that could prevent a patient adhering to the proposed clinical recommendation. Physicians provide specific information or feedback to Clover on how or why they are treating their patients and their members. It moves on to engaging in a two-way conversation with the physician and the member, provides physician with supporting evidence including lab results, clinical rules, and learning suggestions, recommends the next steps for proper treatments, and that way they avoid additional costs that perhaps if it was too late it would adhere to. So some of the things, for instance, is the machine learning that enables the proactive care planning, is the chronic condition surfaced via machine learning, congestive heart failure, diabetes, chronic obstruction, pulmonary disorder, chronic kidney diseases, and more. And personalized care planning, evidence-based medication regimes, specialist referrals, diet education, hormone level testing, physical therapy, medication adjudication. The third step is how do we deploy the engaging software. Now, this one here is in just over 2 years since the product launch. They have over 2,000 engaged physicians contracted to use the Clover Assistant across geographics and practice types. So you can get to see there is growth year per year, and that is amazing. Now they do have an easy of use tried software. Takes basically they give 1 hour onboarding training that is needed, and the rest looks to be quite nice in terms of their features and their numbers of growth. Now, in terms of the cost structure, the Clover with Clover Assistant, it's 5% of membership account for 40% of cost complex care savings retained by Clover. Meanwhile, typical MA insurer has 5% of membership account for 40% of costs, the complex care savings shared with vendors, not by Clover to their customers. So that is the main difference. Now we can move on to try to find, there we go. So their upside economics with stars right now in the first half of 2020, they have their HEDIS features that are released. The second half of 2020, they roll out features to support A1C controls, medication adhering to, and transitioning in care measures. The future releases are relating to continued address clinical measures as well as incorporate survey education, and then regulatory tailwinds, government support for calculation methodology changes, including 1, local rather than national comparisons, 2, alternative weightings methodology for social risk factors which are insufficiently accounted for currently. They estimate an improvement from 3 to 3.5 stars and from 3.5 to 4 stars would each yield around 500 BPS improvements in revenue to be reinvested into more benefits to their members and consistently grow their members. Now, the fourth one is designing obvious plans. And so Clover wants to have an open access at a low cost. The current incumbent wants a high cost and a narrow access. And so that really is what puts him ahead. I already covered this one already. Next thing is total Medicare population is expected to go to 73 from 62, and so there is going to be a growth there. Clover has over 50% take rate across established markets, and Clover today only offers plans and market services where there's only 3.1 million lives. Now, when we're looking from current lives of 62 and they only offer 33.1, if they were to expand, there is a massive growth potential there, and that is what they show at the end of the video, at the end of the presentation. Now, some of the things that they have is launch direct contracting, developing network of adequacy for Medicare Advantage, launch obvious MA plans, and expand provided network, which is exactly what I mentioned. Now, the next thing is financial highlights. And instead of going on to their really nice presentation that I did go on before last time, let's dive into their SEC filings that looks a lot uglier. Now, the first thing that you need to know is their next steps regarding their transition. So currently they are trading under IPOC. Starting January 8th, 2021, the new symbol will be CLOV for the stocks and CLOVW for warrants. And currently the last trade trading on NYSE is expected to be January 7th, 2021, and it is going to move to NASDAQ under CLOV, on January 8th, 2021, usually expected in the morning. So the next day you'll find it changed. And I'll show you the basic trend for all these SPACs and reverse merger and what happens in there. But before doing so, revenues. So your total revenues from 2018 to 2019, you see a really nice increase. 2019 to 2020, that's 9 months, you see another nice increase. Now what I'm focusing on is their net losses. Their net loss seems to be increasing from 2018 to 2019 from 200 million to 363 million, with the major cost being their net medical claims incurred. Now next thing, for 9 months ending 2019, you get to see that their total revenue has increased and their net loss has decreased substantially, and that is amazing. Meanwhile, we don't see much differences in terms of everything else, perhaps just a little bit in terms of their loss or gains on derivatives. So they have gained on derivatives, so that really changed things up. But even with their looking at a 97 million compared to 85 million. So it looks like they have improvements there, and they've done a lot. In terms of their total assets, we get to see an improvement in total assets around right here. The numbers are currently at 326 million in terms of current assets. As we know, their estimated worth is $3.7 billion. Of course, not all shares are going to be moved forward. Well, I mean, all shares will be moved forward, but the new ticker will have something around, I believe, 6% of Clover, off the current IPOC shares. Or Clover IPOC shares will represent 6% or around there roughly of the new ticker. Give or take. Now this number has changed over the months, so don't quote me on it. You'll find it in the SEC filings, and the closer to the date we'll get the exact numbers. It doesn't matter. That's what SPACs do anyway. So this one here is something that I found very, very interesting, and I do 100% agree with it, and I've seen it so many times. First, the letter of intent. $10 is the price floor. That basically, the price is usually that, in terms of any special acquisitions, around $10. The letter of intent comes out, and then you have the initial run up after the letter of intent. Price jumps up, it really rallies, and then drops back to somewhere off a normal level. And then further increase as the DA is announced and the merger date get closer. You get to see this massive push. Right now, we're somewhere around, I believe, this range, if I was to say what we're at right now. So there definitely is most likely going to be another push. And then officially merger date and ticker change. Uncertain period where majority of profits are taking and risks increase. Generally, the stock price dips initially. And I've seen that happen so many times. And so it is not something that is out of the blue. I've seen it happen a bunch of times. Now, on technical analysis point of view. Moving averages now look really, really bullish. It looks amazing. ADX shows in a very strong potential for a continuous bullish rally. William %R says, hey, this one is actually overbought. Be careful. MACD says, we were testing a negative reversal and that is rejected at the current time. Momentum is pulling off strong. Now, let's do a quick 2-hour perspective. 2-hour perspective puts everything across the board bullish. Now, it is thinning on the candles, and that is dangerous. Moving averages do look bullish. ADX shows in a potential here in terms of an increase. MACD shows in a potential for another push there as well, and it stabilizes. William %R puts this one at highly overbought, which is dangerous, but momentum is looking nicely. Now, in terms of volume, today's volume has been a massive spike. The question here is whether volume will actually continue increase or even match it. The moving average band expects this one to trade at 1181 at the top, 1074 in the middle, and 967 in the bottom. Now, it doesn't really follow this moving average band, but it's just for the sake of the argument, we're going to mention it there. Stochastic fast and stochastic slow are both saying, hey, be careful, there might actually be another leg up, but it is a little bit at a higher level than we're comfortable with. It's not time to swing and buy, it's more of time to buy perhaps and sell closer to New Year. Now comes in towards if there's any trends. Now, of course, this might be looking like a cup, and then with a handle, and then it just basically broke it up and broke that trend fully. So what we got to do right now is try to go on quickly with the Fibonacci retracements to find significant supports and resistances. We'll start at the 1335 mark and go all the way down to 987. The significant support currently sits at 1202, below there 1161, 1120, and 1069. Significant resistance sits at 1261. Now, let's do quickly here price line action for significant supports and resistances. The current significant support sits at 1208, below there 1199, and then below there we're looking down to 1184, and then down to 1167, 1155, 1142, looking down to 1129, 1123, down to 1102, and then down to 1076. Significant resistances lie up to right here, 1233. That is a significant resistance. Above there, we're looking at 1249, 1270, 1293, and then 1315. And from there, it's so easy to get to 1335. Probably once it reaches there, it's gonna break like butter upwards. So Ed, what do you think is going to happen for this ticker? Remember that diagram I showed you not long ago? Was the last thing I showed you in the due diligence part, is the current trends of SPACs, especially after the reverse merger. There's a lot of amazing stuff we're seeing on in terms of the due diligence about this one. Definitely long term it is bullish, but the question is when to get a better average. And the expectation is this one will rally closer to January 8th. So remember, there is another meeting. There's a general annual meeting that's going to happen as well, not long from now. And then after there, what's going to happen is your your new ticker will be shared. So on January 8th, you're going to have the new ticker. What's going to happen most likely is that this stock will probably retract a day or two after the new ticker, and from there it's going to crumble a little. Profit's going to be taken, and then people are going to they're going to take their profits. A lot of speculation start to rise. A little bit more of that euphoria fades away. Now, just a quick thing, there is a meeting on January 6, 2021. That is the general meeting to approve business combinations, and that's expected to be going soon, like fine, so it's not really a very solid catalyst. But what I expect is we're going to get another push, perhaps to $13 or so. And then closer to the merger date, we're going to see other pushes. But then later on, after a week, I would consider if you want to lower your average then or sell and then buy at a lower average, wait a couple of weeks after the merger, and definitely think this one is a good investment. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.